Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 30. And today we're looking at the headline ASX 200 sinks to 2 month low as rates correction continues. So let me just move me out of the way a little bit. So sinks to a 2 month low. And so I wanted to talk about this headline. Um, Maybe just the headline. There's not a great deal in the article that's of any real importance, but this is a headline that we see virtually every time the stock market has any form of extended falls. So, the market's been dropping for about a week. So, suddenly we get these headlines about sinking to a 2 month low. And what's so important about 2 months? Nothing. Why would you relate this low to 2 months ago? There's no reason. And so the reason I wanted to talk about this is the type of headline that will ruin your wealth goals when it comes to the stock market. I know it's a big call, it's an aggressive call, but I've spoken to way too many people who are fearful of the stock market, and that fear comes from headlines just like this one. ASX 200 sinks to 2 month low as rate corrections continue. Now, you could replace the ASX 200 with the S&P 500 in the US or the DAX in Germany, whichever market you want. The impact of these headlines is it scares people into thinking that this is like Armageddon, that this is going to be really bad for their stock investments. Like I said, there's absolutely no reason for 2 months to be relevant at all, other than to say we're back to where we were 2 months ago. Big deal. And so, I mean, the article does go on and talk about all these different things about the market fell this many points, and it was caused by, and they'll go into 9 out of the 11 sectors across the benchmark finished in the red. Led by losses in tech and materials. But by the way, health stocks were the best performing. They actually went up 1.1%. So you read all this stuff and you go, what are they talking about? Like, why is this stuff relevant? Why do I have all this nonsense filling the news space today? And simply because they've got to write something about what happened in the stock market. They've got to be able to blame it on something. They've got to look like they know what they're talking about and pin it on something. Then we go into a whole garbage about Qantas and what's going on there. And then there's talk about the impact of mining magnate Gina Rinehart and what she's done with a company that's subject to a takeover, impact on its share price, and like it's just all over the place. But the thing is, unless you're a real active investor, more than likely you just saw the headline and it reinforced. Let me go back there. It reinforced what you've always thought about the stock market. It's fearful. And guess what? It goes up and down all the time. It goes up and down every day. It goes up and down during the day. And it doesn't mean anything. What I want you to take from this headline, if nothing else, is that what happens today, what happened yesterday, and what happened a week ago, what happens tomorrow in the stock market is irrelevant to your long-term wealth plans. And yes, the market goes up and down. We know that. We know that it has these waves in every month. We know that it has certain reactions at the end of a quarter or a half year or a full year. It's because there's big players in the market who do a little bit of manipulation around certain time zones or time periods to improve the results of their marketing material for more people that they're trying to get to invest with them. We know all this stuff happens. We know there's market manipulation. They can say, "Oh, no, there's not." Garbage. There's market manipulation, but that's not what this headline's about. So I won't go down that rant. But we know that the market moves in certain flows, but we also know over the long term that the graph just goes like that. If you smooth it all out or you draw a line through it all, it looks like that. And that is why we invest today to be in the market for the long term. So you will have heard me say it, and if you haven't heard me say it, you've probably heard others say it. It's not about timing the market, it's about time in the market. And if you want to spend time in the market, you need to ignore headlines like this because you don't give two hoots about the fact that yesterday's market closed at the same or thereabout level of what it did 2 months ago. Who cares? Totally irrelevant. And it's blaming that fact on a rates correction. Who knows whether that's what actually caused what happened in the market yesterday? And it's just it's just to create headlines. It's just to be able to write a story. It's about to put something in the media so that people will read it. It's not reality, and it's not what is going to help you grow your wealth. So I started these weekly wisdoms, Woody's weekly wisdom videos, to show you how getting your financial information from the media is dangerous and has an impact on your ability to grow your wealth. And I see it constantly, week after week, when I'm talking to people about the stock market and the fear that they have because they've seen these type of headlines. They've seen that the market has these big falls, or not even big falls, but it has it just goes up and down, and it freaks them out. And I want you to know that that is just normal. It is what the stock market does. It's like the ocean. It rises and falls all the time. But the thing that's different about the ocean and the stock market is that the stock market is rising over the long term, historically, for a long, long time. Now, I won't get into the environmental impact about the ocean levels rising and all that type of stuff. That's not the point. The point is the stock market does rise, but it doesn't go in a straight line. It does go in waves, and it does have moments of correction, and it does have moments where it just runs away. And the media will tell you that it's run away because of something. It won't be right, but it'll say it's because of something. And we just know that that's how markets move. We also know that there's an enormous amount of superannuation money that is being poured into the markets month after month. All that super contribution money that you're making has got to go somewhere. And so it's going into the stock market, it's going into the property market. And that just helps boost values because the money's got to go somewhere. So when there's a limited supply like there is in stocks, then that pushes prices higher. Simple as that. Now, sure, these higher prices have got to be justified by profits, but when there's money flowing in the system, those profits are generated and we get the outcomes we're looking for. So the short message from this weekly wisdom is that yes, markets rise and markets fall. What you should do is see this headline and go, oh, wow, it must be discount time in the stock market, and go and get some cash and put it in the stock market when the prices have fallen, because that'll take care of itself over time. The market will correct in the other direction for whatever reason they assign to that, and you'll be sitting on a great profit. So take that for what it's worth and put it to your stock portfolio so that you can grow your wealth consistently over the long term. It's all about the long term. It's not about what happened yesterday. It's certainly not about what happened 2 months ago. And it's all about what's going to happen in the next 5, 10, 15, and 20 years with your stock investments. Hopefully that was helpful. That's Woody's Weekly Wisdom, episode number 30 in the bag. We'll see you again next week. Have a great week. Cheers.